Hello to all traders and welcome back to another market review brought to you by Orbex. So we're kicking off this Monday's trading with a bit of a subdued dollar. We've seen gold really pushing for that 1900 handle once again after not only the NFP numbers came in above expectations. It was the unemployment rate, that actually increased, which saw a little bit of a subdued undertaking on the dollar, and also the collapse or the potential collapse of Silicon Valley Bank on Friday. We've also had Signature Bank, which has been closed by the US government after it was teetering on the brink of collapse as well. So, are we going to get possibly another 2008 financial banking crisis again? Well, Janet Yellen and Fed Chair Jerome Powell have both stated that Silicon Valley clients and Signature Bank clients will be made whole, will be given their deposits back. But how much of that at a cost of the American economy? We'll have to wait and see. Well, we've really seen, as I said, a bit of a jump on gold since we opened the markets on this Monday morning, and a bit of a downward spiral for the dollar as well. So, as I said, NFP numbers have really been ignored. It's all about this banking crisis that's been happening and where it's going to go as well. But if we look on the charts for this Monday morning, we're just seeing now that gold, as I said, is giving a 4-day bullish run today, really spiking in the early Asian session. And as you can see here, reaching to 1894, 1895 before coming down, trading roughly $10 lower now. But it is a big move in the market for gold traders. We're seeing now, as I said on Friday, NFP data really being ignored, and the gold jumping by over $40 in just one session. Really big moves there. So what's next in store for gold? Well, we're going to most probably see the news coming out of Silicon Valley Bank as the American session opens, and also we're going to probably see another move to the upside because it most likely is going to have an effect. The banking crisis, the banking sector, is going to have an effect on the dollar as well. So Joe Biden has been stepping in as well, trying to reassure people that it won't be another copycat story of 2008, where we saw some really bad moves in the market, and obviously the global crash that followed afterwards. But if we're looking on the RSI, we're seeing that numbers are very overbought, so we are expecting a bit of consolidation now. Depends if we get any divergences to see the next move on the market. We could have a slight move lower before picking up back to possibly 1900 again. So there's always these big bounces in the market and big reversals when we see pushes in the market up to higher or lower. So this is what we're looking out for in the near term as well. So just keep an eye on the headlines, because they're going to really start pushing the gold and the dollar as well. So speaking of dollar, we're just looking on the index now. Just bring it back to the daily chart, and obviously, like we always show, gold's on a 4-day winning streak. That means dollar's most probably on a 4-day losing streak, which it is doing. It is really pushing lower, but it's found a little bit of support on the top border of this Ichimoku cloud, roughly just at the $104 area. So this is a very psychological area that we're going to be picking up now. We're going to see if that's going to have any influence on the next progression of the dollar, and if we're going to see any more in the way of divergences like the one we have seen here, slight bearish one, bringing prices lower. And if we can get more of a confirmation on that, we'll see if that's going to happen to start pushing prices a bit higher. But let's look on the 4-hour chart, because this is most interestingly enough, with the assistance of the Ichimoku cloud once again. As you can see, very bearish candle here. This was noted when the NFP numbers came out on Friday. Even though it was a strong NFP number, as I said, the dark cloud hanging over the American economy with the banking sector. As I said, Signature Bank was closed because it was on the brink of collapse. We've got the SVB really starting to push prices as well, and obviously the unemployment rate ticking higher at 3.6% versus the historic low of 3.4%. So this is something concerning for the Fed, and really looking at their monetary policy as well. So with their next interest rate decision on March the 22nd, it's not so far away. We're now seeing possibly more signs that the Fed will aggressively raise rates, possibly to 50 basis points. So this is why it's interesting to keep an eye on the dollar as well, because we're seeing now that prices will start falling quite significantly. And if it keeps on happening like this, then the first quarter will most probably end with a negative reading for the dollar, and obviously positive for gold. Just go back to gold quickly, because I just want to emphasize that after this 1900 push was most significantly the last time we saw the big decline was the last NFP reading at the beginning of February. So we're looking to possibly have this move in the market and possibly start moving back up to 1940, 1950, possibly in the next week or so. I keep saying possibly because we're waiting to see the next move from not only the SVB scenario, but the Fed as well at the end of this month. So let's keep an eye out for gold. And as always, we'll bring you all the updates on our Telegram and YouTube channels. So stay tuned and trade responsibly. Thanks for joining me, and bye for now.